the problem with Europe is really the discrepancy you see between different countries. You can see inflation at 3% in part of the European or the Eurozone, and you can see inflation even higher than the number that we got from Spain. So I think the ECB is in a much tougher situation when it comes to deciding what to do next. And there is also this souvenir of what happened during 2011 and 2012 and the sovereign crisis. So the ECB might want to be much more cautious compared to the Fed when it comes to normalizing their monetary policy. At least that's our view.
So the fact that we're getting some of these higher prints and the fact that we've seen Mrs. Schnabel talking about the need to respond to higher energy prices, it in no way changes your thinking about owning European equities?
No, it doesn't really, because there's absolutely no way the ECB is going to act faster than the Fed. As you mentioned, the Fed is going to go first. And so in this context, Europe will always, even if the language from the ECB change at the margin, the Eurozone will still have a much more accommodative monetary policy 6 months out versus what the US may have. So from that perspective, and from the perspective of the economic momentum that we see and the cyclical exposure you get from Europe, we still believe Europe is in a good place for at least the first 6 months of this year.